IRS problem specialist Joe Mastriano. Joe, how are you today?
I'm doing very well. How are you doing?
Good, sir. Talk to me about, a lot of people, the unintended consequences or things people didn't know are popping up now with Obamacare. What are some of the tax implications people need to be aware of?
Basically, our costs have gone up and our deductions have gone down. There is a middle group of people that if your company pays your insurance, your salary's not that high, and you don't need any medical devices, it really won't affect you. But what happens is the insurers pass the premiums to the consumer, and you have to, the big thing is you have to have insurance. If you don't have insurance, you'll get fined 1% of your taxable income, which can be a few $100s for people, minimum of $95. Taxes on different things have gone up, medical devices, pacemakers, artificial limbs, things like that. But your deductions, if you itemize your deductions and you subtract your medical expenses, it used to be 7.5%. You subtract from that. You don't get all your deductions. 7.5% of your adjusted gross income. Now you have to deduct 10%. So you get a smaller number to deduct, even though you're spending more. The thing for people that are earning $200,000 or more, single, $250,000, or tax the higher income people, Medicare tax goes up more than 50%. And then dividends, and this is really, dividends, rental income, capital gains is going to get an extra tax of 3.8%. So there's a lot of this extra nickel and diming of taxes that are here.
And that's all related to Obamacare. That's go to help to pay for to Affordable Care Act. Is that what it is?
Right. Right. Well, what happens is it's a way to shift money out of the hands of the higher income people, and what he's doing is saving money for the hospitals because you got a lot of people that go in, they don't have insurance. Well, now he's requiring you have insurance, and if you live at poverty level, you'll get premium credits against the premium, so your insurance costs will be real low. So it's a good shifting of income, but it's hitting people a lot harder than they realize.
And you as a CPA and an IRS problem specialist, I imagine you're going to see more problems, and the CPAs are probably having to relearn the code, and as the IRS does too as well, right?
Well, yeah, administering this, and that's what's happened lately in the law with what do you call when people buy houses, credits for homes, and then having to give it back if you don't follow the rules. What's happening is these rules are getting very, very comprehensive, and even the IRS is going to have a hard time administering it, and that's what's happened lately. Costs have gone up for people who want to do the returns properly. If people Google Killer IRS, get to my website, I have this stuff in a news blog, but my specialty is helping people not get audited, and what happens is, people get confused about these little deductions, and they want their extra little $100 deduction or something, and what happens is that you get audited. The average person is getting audited, and they're denying deductions, and they don't know what's going on. They're bluffing. So you got these untrained auditors that you give them your receipts, canceled checks, invoices, and they're still denying the deduction. And that's the biggest problem. And I have a 4-part program that protects people from being audited. So far, anyone that's used it has not been audited. And also, we document returns when we do them to avoid being audited.
Al Smith on with Joe Mastriano. Joe, one last time, give me that website. I didn't quite hear that, so our listeners.
Well, the website is taxproblem.org, but if you Google Killer IRS, that's KILLER IRS, that's my trademark. My website will come up.
Terrific. Joe, thanks for sharing your information with us as people got to realize how things are changing here in the next year as it relates to Obamacare. Thank you so much.
Absolutely. Thank you.